Good morning, everyone. It's January 21st, Thursday. I want to give you a quick recap and a few things to share this morning. U.S. stocks hit record highs after Joe Biden became 56th President of the United States. My prediction is correct yesterday, but now it's a matter of sustainability, and if green energy, small caps, and bands will continue to rally today and probably this week. President Joe Biden signed executive orders that underscore his intentions to take a drastically more cooperative and multilateral approach to foreign affairs than his predecessors. If you can look at the screen, just want to share with you a few interesting factors to share before I run into the details. The Dow Jones Industrial Average returned 56% during the Trump presidency, according to LPL, which you can see the source where this chart coming from. The annualized return of the Dow was 12.1% and 15.9% for Obama and Clinton, respectively. So even we think Trump has pulled the stock very high, the fact of the matter is, for Dow, Obama and Clinton actually did a better job than Trump. Trump, even though the return was 56% during his presidency, but his annualized return is only 11.8%. Since election day and up until inauguration day, President Joe Biden saw the sharpest gain on record in the S&P 500, 12.8% return, although we saw pullback a week before. Dow's up 257.86 points to record high 31,188.38. Nasdaq up 1.9%, ending with 13,457.25, and S&P 500 up 1.39% at 3851.85 yesterday. Most of the Asia stock climbed, with China Hang Seng the notable exception, retreating 0.1% of profit taken after index temporarily topped 30,000 points. All major U.S. futures are positive. Nasdaq up 0.45% and Dow up 0.2%. As you can see the graph, yesterday it was actually really great, as my prediction that the market should be welcoming for the new leadership in America. Morgan Stanley report fourth quarter earnings that beat analyst expectations. Many Chinese stocks surge as optimism on improving relationship between U.S. and China. Mega Chinese stock Tencent has hit record high to $88.07, and Billy was at intra highs 137.22. Remember Bilibili.com, the one I told you about? For those who follow my video, it was probably a month and a half, 6 weeks ago. It was like $40, and now it's $137. As for other tech giant, Amazon.com rose 4.6%, rebounding from its 50-day line and leaning some early buying signal. Facebook up 2.4%, and Sales.com, which is the one I recommended, but it was sunk after the mergers, up 3.1%. Both continue to rebound from their 200-day lines, and my prediction for Salesforce.com is once the merger has completed around February, the stock should back to $240 level. Netflix stock spiked 17% to 586.34, hitting a record high after announcing earnings. Green energy stock are mixed. XPEV rallied nicely when the market first opened, but closed lower by 2.56%, and NIO was also closed slightly lower. There's still approximately 14 executive orders Biden need to reverse or sign, and the total 17, and he did 3 in the morning, and I'm not sure in the afternoon he signed any yesterday. He has a few positive working on his side that will help making things happen faster. On earnings today, Intel Corporation, symbol INTC, is expected to report earnings per share of $1.10 on revenue of $17.45 billion. IBM International Business Machines is seen reporting earnings per share of $1.81 a share on revenue of $20.6 billion. And Travelers Company is expected to report earnings of $3.16 per share. And actually, it came in as higher, but the but the revenue was lower, only came in 7.27 billion, was slightly lower than 7.3 billion estimated. But the market stock is up about 2%, $3 higher. Initial jobless claims are due and expected to be 910,000 people, and continued claims are expected to be 5.4 million. So what's next? The S&P 500 will end the year a record high to 4,100, according to RBC Capital. This is 8% increase for a year. In the best case scenario, it was predicted to be 4,600 this year. However, what you may have to remember are some of the concern and risks: higher corporate tax sector regulation, pullback of Federal Reserve support, the increase of interest rate, continued devaluation of US dollars. These are all unfavorable. You may have a couple of corrections before hitting another record high in the market. Therefore, it's important to position yourself very well with some cash on the side. Buy when the market pull back and sell when you have achieved your objective of market return. I'm posting a few videos recommending some stock this week to consider during the time. And for those of you who haven't watched the one I recommended for 2021 stock, please find time to watch as well. Stay tuned. Have a nice day.